Hello, this is Angus Murray from Castlestone. I thought I'd just send you through this 8-page brief presentation with regard to where markets are at the moment. It's clear that we have seen what looks like to be a bottom with regard to markets, and that has already occurred around a week ago. And then we've seen the positive earnings out from both Microsoft and also Alphabet. Alphabet's earnings after the market today, which I think will reinforce the earnings power of the technology companies. So the question mark would arise, is it possible that the worst is already over for the S&P 500 and NASDAQ? The four main points that we would highlight within that are as follows. First of all, when markets are in sell-offs, if there is not a recession, and there's clearly not a recession at the moment, then the sell-offs tend to bottom with a drawdown of around just over 15%. And as of prior to Monday, the NASDAQ had seen a decline of just over 16% and the S&P 500 a decline of just under 12%. So historically, that would indicate that we are coming to a bottom with regard to the sell-offs. Interestingly, the sell-off in NASDAQ did push NASDAQ back to some of the cheapest valuations we had seen in the last 2 years, and there's a slide with regard to that. And then to reinforce that, we know that Microsoft's fourth quarter earnings were very good for 2021, and then we had that reaffirmed today again with Google's parent Alphabet coming out and beating also its fourth quarter 2021 earnings expectations. So the general comment is, if the stock market declines, runs out of energy, then they tend to go back up. Now that may take some time and it may be volatile, but markets do tend to also rise after interest rates have actually been increased. And it would be expected that everybody fully understands that the Federal Reserve is going to increase interest rates in the middle of March. And therefore we go back to that question, have we seen a bottom with regard to the markets at the moment? Slide 3, just taking a look at what occurred throughout the month of January. Certainly a difficult month for equities, although we are seeing a bit rebound coming back as previously mentioned. And therefore the question, as I indicated before, comes back to it, is it possible that the worst is already over after we took in those double-digit declines throughout the month of January? And I think there is a possibility that that is true, but only by the basis that the earnings numbers are coming out and they are very positive or beating expectations in the major technology companies. And we did see that again today, as I indicated, in Google's number, or Google's parents, Alphabet's numbers, but also previously with regard to Microsoft. And here is just looking at some more information with regard to how the S&P 500 has normally moved in terms of price declines and length of days. And you can see that we are very clearly around that average. So it's not surprising to offer the thought that markets have already bottomed. You can see here that NASDAQ was at its cheapest level that we had seen in a couple of years. Clearly NASDAQ had risen towards the end of 2020. So yes, markets might not go up dramatically. They may stay around these levels and drift up as we go through the rate increases by the Federal Reserve and people realize that technology companies are continuing to show very good earnings. And therefore you get an improvement in the overall valuation, i.e. the share prices have gone up a little bit, but the earnings have gone up more. And then the last two slides is just reiterating what's come out with regard to earnings estimates. So we saw previously that Microsoft beat both its top and bottom line, as LinkedIn revenues were up 51%. That was for the fourth quarter earnings of 2021. And then lastly, we had after the market today, Google's parent Alphabet reporting better than expected fourth quarter earnings in 2021 on both revenue and also earnings, and announcing a stock split. If you need any more information on that, by all means, please come back to us and we welcome your comments. Thank you.